All right, Gilead's in the news today. Gilead tumbles on latest data leak over China trials. Okay, great. Not the best news, obviously, but there's a little bit more to the story than meets the eye. I'll read you a few lines from this article. Gilead shares were whipsawed for the second time in a week after a summary of the Chinese trial of its COVID-19 drug appeared to show that it was a failure. Okay? But there's more to it. The company and scientists working on the trial said it didn't fairly represent the actual results, which is good that you want the company to defend it and say, well, okay, let's hear your evidence and why are you saying this, and but it gets weirder. The World Health Organization, which has been helping coordinate the global response to the virus, said it accidentally posted the results on a website that helps track therapies for a disease. It accidentally reported it on the website? I mean, you don't accidentally post something on a website. When I post this video, it didn't just get there by accident or by luck. I mean, there's I have to go to YouTube, I have to log in, I have to upload the file, I have to put in a title, I have to put in a description. I mean, you can't just accidentally. I mean, I accidentally tripped over a cord the other day. That was an accident. I didn't accidentally post something to a website. So I don't understand that. But regardless, if you don't own the shares, I certainly don't think you need to rush into these. If you do own the shares, you don't have to rush out. Okay. Now remember, we said do not buy any of these stocks for the COVID-19 only. It's just a bonus. Okay. So let's remind ourselves of Gilead, and we'll go to the model first. All right. Zoom in on the model, please. Here we go. And give it a second for the graphics. There we go. Okay, so here you see the history of the company, and it's got a pretty impressive return on invested capital profile, right? So that's this top bar chart, return on capital, often even going off our chart. We cap our chart at 30, and then in this period right here was off the chart, and it did come down. And as we've said many times, you can see the stock chart in the background there, kind of the light yellow, was coming down as return on capital was coming down. And that's because some of their drugs came off patent and were genericized, and that's fine. So, it made sense to me to not own the shares while the return on capital was coming down. But the return on capital has kind of flattened out and, in fact, bumped up ever so slightly. That's awesome. I always look for that signal regardless. And then I found out, they also have a drug for the COVID-19. Well, okay, bonus. So, as I said, it already looked like it was an interesting idea anyways, because things had flattened out, like they bottomed out, and it was starting to kind of improve the return on capital. Okay, let's, for a moment, flip over to the website of the company and check out their pipeline as well. Again, reminding ourselves, this is not just a one-trick pony here. Okay, so we're on the website now, pipeline. And the first thing that jumps out at me is viral diseases. So there's more than one viral disease than COVID-19. Inflammatory diseases, fibrotic is the way it's, yeah. I was thinking fibrosis, but it's fibrotic diseases, okay. Oncology, which is cancer. So, I mean, these are big areas, right? And then you scroll down a little bit. And viral diseases, HIV treatments, yeah, they've always been strong in HIV. HBV, I'm not sure what HBV is, but okay. Inflammatory disease, rheumatoid arthritis, huge disease. Ulcerative colitis, Crohn's disease, huge problems. Psoriatic arthritis. osteoarthritis, inflammatory diseases. There's a whole different phases. Phase 1, 2, 3. 3 is obviously the best. Fibrotic diseases. I'm not too familiar with any of these, but that's okay. There's a whole list of them. Oncology, so that's cancer. I mean, lots of different. Couple in phase 3, bunch in phase 2. Anyways, it's a healthy pipeline, right? It's not only based on this COVID-19, and that's the key. Because can you imagine if this was their only thing they were working on, and this news came out? I mean, the shares would be down 50%. It's down 4. Okay, 4, maybe 5 now. Not a big deal. As I said, we bought it for other reasons as well. It still looked good. This is why you do this, because if something like this comes out, I still am not convinced that remdesivir is a total flop, as some of the headlines say. It might be, but even if it is, you can see the air's not going to come completely out of the company. There's still other reasons to own the company, and that's why we said Gilead in the first place. Okay. Thanks for watching our investment video. If you want to improve your portfolio returns, simply subscribe. Or if you're an investment advisor or a retail investor and you want help with your portfolio more directly, we can help you with a managed account and manage each and every trade for you.